You always have to know your financial health because it really is a health of the overall operating model. And by looking at it monthly, you can catch something before it gets out of hand.
Mm-hmm.
And you can also make predictions, make, valuable decisions on where to spend your money, how to spend your money, and come up with a strategy to be as profitable as you can.
Rachel Blair, what's up?
What's up, Rick?
How are you?
I'm good. How are you?
Good.
Awesome.
Glad to finally get you on here.
Yeah, I've been here a whole year, and you finally got me.
Has it been a year?
It's been a year.
Wow.
I know.
You're awesome. Welcome.
Thank you.
I'm glad you've been here a year.
I'm glad to.
Before we introduce everyone to you and why you're sitting here with me today, do you have a dad joke?
Of course.
Dad, you said you want me to go first?
I do.
Well, is yours like not?
Well, because I'm an accountant, I'm over-prepared. So I need to pick. I need to narrow it down.
All right. I always have to read mine now. I used to remember them, but my brain is like shot. So here you go. Most people are listening anyway, so they don't know. So For those of you guys listening, I may be reading it, maybe not. Maybe I committed it to memory. Why do cow milking stools only have 3 legs?
I don't know.
Because the cow has the udder.
Oh. Okay.
Yes.
That was a good one. Okay, well then that definitely set the tone.
All right, what you got?
When does a dad joke become a dad joke?
Oh, I've heard this one, but I don't know the answer.
When it's fully grown.
Oh.
I'm sorry, y'all.
No, that's good. I've told that or someone's told it, but when you do 250, I've actually told the same one for myself.
Okay, that's fair. You're allowed to do that.
He's mad. I'm like, I can't believe you don't listen to it. You said one somebody else said, and then I'll repeat one that I did. I'm like, yikes.
Yeah. I don't know if we have that many dad jokes in the universe. I can see why you run out of material.
And we all think we're all sourcing them from the same place, and so you just kind of run out.
Yeah.
Plus, some of them I can't play on here because they're not like the one I did a couple weeks ago. It's pretty saucy.
Yeah.
Didn't get us canceled yet.
No canceling.
That being said, so what is your official title here at Alloy?
I am the manager of finance for Alloy HQ. I do the books and generally financial management for the headquarters.
So what is your background? How did you get to this point? I know you have a very interesting personal background, which I also want to get to, but from a professional standpoint, how did you get to this point?
Well, I have been in the accounting industry about 23 years, and I've touched just about every single industry that has a bookkeeper.
Really?
I've done manufacturing. I've done construction. I've done finance, general automotive. I've done general building services. And now here I am in the franchise world. So it's
interesting.
It's been a big journey for sure. Sure.
And for those of you guys that are listening that don't know about franchising, it's like there is this huge annual audit that has to be done by a franchise accounting firm, and it is a monster. And so Rachel spends a good deal of time, certainly towards the end of the year, going into next year, getting all that information to our franchise accounting firm because in a good way, we have to be audited so that any claims that we make are reinforced with data. And so you have to pull that together.
Correct.
Which is a monster job.
I pull together all of the data for all of the franchise, across the entire franchise, all of our franchisees. I monitor their performance. I monitor their value and what they bring to the brand, allowed us to strengthen the brand, so to speak. And we, make sure that everything that we report is accurate.
Yeah, love it. So let's talk today about at the unit level, so down to like the facility, right? Because I think there's people listening to this. I've been in the industry forever, so I have listeners that are, not Alloy owners, and then we have a lot of people that are either looking at an Alloy or they're already in the Alloy system. Mm-hmm. So when you're talking about tracking finances for a single facility, right, like one location, what are the couple of things that you're really looking at?
Well, what we really look for in an Alloy franchise is we look for your profit and loss, and we look at your balance sheet.
Can you tell me the difference between the two?
Yes, I can.
Listen, I know, for those of you guys that have a finance background that are already with Alloy, you're like, oh, this is. But I'm telling you, all these years in the fitness space, there are people that don't understand these numbers, and it's only 2 things, but you just need to understand the difference between the two. And then we'll work through some of the things that we commonly see and some remedies for that. So go ahead. You want to define each one or either one?
Sure. I'll just jump right into it because for a high level view, your profit and loss is also known as your income statement. It shows how much money a business has earned and spent over a specific period, like a month, a quarter, a year. Think of it as like a report that tells whether or not a company is making profit or losing money in any particular span of time.
Right. So you can pull a P&L for a quarter, for a month, for a year.
Exactly.
Yeah, whatever you want to do.
Whatever you want to do, however small of a time that you want to look. Nobody ever really looks at weeks, though. I'm going to be totally honest there.
Micro, yeah.
So
yeah, for sure.
On a monthly basis, you should, as a franchisee, be looking at that. That is a very important part of business health.
I know it's pretty basic, but what are the main, like, what are you really looking at in a P&L? I know you've got like three things. And again, they're very simple, but like, I think we go through them, right?
Sure. So on a P&L, you have your revenue stream, which is your income, anything that you, from selling goods, selling services, anything like that, that's considered income. And you're also looking at your expenses. Your expenses are your cost of goods sold, your operating expenses, your non-operating expenses, things that directly you spend into the business. And at the bottom, that spits out a nice little equation that says, did you make money or did you lose money? It's really simple.
Right.
Yeah.
Yep. Exactly. And then with a balance sheet, like that confuses a lot of people.
Yes.
What's the definition of a balance sheet? What's different between that and a P&L?
Okay. So the difference really is that the P&L shows you whether or not you're profitable. The balance sheet is more of like a report card for your business. So it's showing what it owes, what it owns, what it owes, and the net value of what's left over.
Gotcha.
So think of it as like your assets. Your assets are things like your cash, your bank accounts, your buildings, your equipment. Those are assets. Those have value. And then there are liabilities like loans, people that are needed to be paid over a length of time, things like that are known as liabilities. And then there's also equity. Equity is what is left over when you subtract liabilities from assets. And that is kind of a report card at any given time. It can either be over the life or it can be a certain little section. And it helps you understand your financial position. That's why it's important for you guys to look at your balance sheets.
So you need both P&L and your balance sheet.
Yes.
Right. And you would look at both monthly.
Yes.
So we know the difference, right? Let's apply it to like specifically an Alloy location, but let's just say a like business, like a small fitness business, studio, boutique fitness, if you will. Mm-hmm. How would it be applied to that business? I know, and just to give you guys a heads up, as a side note, we provide for our franchisees a chart of accounts, which I know we'll get to the details on that. But then we also have a tool called Profit Keeper that goes into the account and automatically pulls the information out. So it doesn't have to be submitted by the franchisee.
Correct.
And then we can curate the data and look at it however we want.
Yep.
We'll be able to say what's the average profit margin, what's the average percentage of labor, right? So in an Alloy location, and as we get more volume, we get a bigger data set, we get more relevant data, right?
Right.
But as it applies to like, I own a single location, should I be looking at these things monthly? Like, how would I apply it to my single location?
Truly, to run a business successfully, you always have to know your temperature. You always have to know your financial health because it really is a health of the overall operating model. And by looking at it monthly, you can catch something before it gets out of hand. Mm-hmm. And you can also make predictions, make, valuable decisions on where to spend your money, how to spend your money, and come up with a strategy to be as profitable as you can.
Yeah. And I think, it's a weird dynamic. And I know for our franchisees who are typically pretty savvy, they've earned the right to invest in an opportunity, and they can normally run circles around a pro forma and understand a P&L. But from my experience in the fitness industry, there's a lot of people that got into it as like a sort of a passion-based business, right?
Correct. Yeah. And
before we came to franchising, I would do a lot of consulting.
Right.
And people would say, my business isn't doing well. And I would say, well, send me your numbers. And I was always surprised at what I would get. Some of that I couldn't even understand.
Yes.
Right?
Yes.
So and our business is pretty simple, right? I know you, compared to other businesses, like how is the fitness business really simple? Well, let's touch on that. Like, so the reason I think that people wouldn't lean in and learn about it was because if you were in it as a passion-based business, and if they were reaching out to me as a consultant, that means they were struggling a bit, and they really just didn't want to know. You know, and I hate to say that, but like, you know what I mean? Like the data doesn't lie.
Right.
It's the best way to run your business, but you have to face the facts of what the data is telling you. So again, it's not typical, certainly in the folks that we're working with now, but I have seen it where people in the fitness business will almost ignore, whether they would admit it on purpose or not, their financials, because they don't really want to know if they're not doing well, how bad it looks.
Yeah,
right?
that is a common tactic, especially if you're kind of entrenched, because usually if you're in that situation, you probably got other things going on that are pulling your attention away.
Right.
So being
if the
organized,
business is struggling, you're scrambling in some other areas.
Being
as well.
organized is step one, and just doing the day-to-day entries to make sure that you never let anything slip through. You never let it fall by. And just keeping regular track of your expenses and your income, making sure that everything gets booked every month. Because we require all of our Zs to turn in the financials by the 15th of every month. We kind of force you into it, but it is a very good practice. In fact, it is best practice.
Well, ours is simple too, right? So
really
like
simple.
Differences between maybe other businesses you've worked in and in our business. What?
Oh, wow. Okay. So,
where do I start?
Yes, exactly.
Well, I wrote down, like, when we were making notes, I'm like, hey, we don't have like cost of goods sold, right? And we can actually start subscription-based revenue.
Correct.
We have the ability to pre-sale a business. So based on other accounting that you've done in other types of businesses, you had mentioned Alloy was simple, but describe that, like maybe some complexities that you've seen. Why is ours so much simpler?
Okay, so the biggest one, first off, is we're cash-based. And what that means in the world of accounting is what you brought in and cash and how it hit your bank account is your revenue. You don't have anything accrued. You don't have anybody owing you money. You don't have an accounts receivable.
Yes.
So that's a big deal. You don't have to chase collections. That is enormous. So having just a simple cash-based business cuts down so much on your bookkeeping. The other thing is that we are service-based as well. So you don't have an inventory.
Right.
You're generally what is on your balance sheet that has a value is your equipment, your gym. So therefore you have everything is on it's fixed assets. So you don't have to think too much about that. You buy it once and then you leave it alone. It's not a month-to-month recurring expense. So those two things combined make this, as a bookkeeping, probably a 4-hour per month job, I would say. It's really, really bare bones.
And look, if you have a finance background or you enjoy accounting, this is a very simple model to run, right? But if you don't, there's we have a vendor in the vendor suite that can do it, Mike's company. You can farm it out to your local accountant. It's so simple. There's really only 4 factors that I see in our model, right? You've got your rent, and that's that's stagnant or stationary, if you will,
correct,
right? Stable. You've got your labor, which might vary a little bit if you're doing a bonus structure, but typically if you're doing a bonus structure, you're happy to pay that additional spiff, if you will.
Yes.
Because that means you're doing well. So you've got your labor, you've got your rent, you've got your royalties, which are set from our standpoint, right? And the only real wild card that's another major expense would be marketing. And that can vary based on where you are in the growth trajectory of your business. And let's say that your gym is at capacity, but your churn is a bit high, then you have to spend more on marketing, right? Or let's say that your churn is really low and you want to reach capacity. You always want to keep your funnel full, but you can drastically reduce your marketing expense at that point. So those are really only the 4 things. I mean, when you look at the energy needs or, most everything we have is in the tech fee. So you're not really subscribing to a lot of stuff that's not already covered in your tech fee in the franchise, which we negotiate better rates for everybody.
Right.
So I think it's super simple, but because you're digging in and you're using this new tool to go and grab people's finances, what do you see are common mistakes that could trip people up?
Really, I think it is in knowing of what to categorize things in. Specifically, just making sure that if you have money spent, and especially if it's a higher dollar amount, make sure that you understand where it needs to go. So let's say I recently saw an example of a $5,000 entry that was hit to a category called uncategorized expense.
No, that's not good.
That's
is
a
that
lot
ever
of
good?
I mean, no, because you kind of want to know where to go, because $5,000 when you only bring in $35,000 a month, That's a significant margin. So
Right, yeah.
you would like to know where to put that and ask those questions. That's the biggest thing that I see, is to know just what you're looking at.
Yeah, because if that was like a piece of equipment, as an example, that would go onto your asset sheet and it could be depreciated, right?
Correct.
So you just want to make sure it's categorized correctly.
Correct.
The good news about being in an alloy, like you said, is we provide the chart of accounts.
Yes.
And then if we see something wonky, we're reaching out. So in a lot of ways, not only is the franchise like a proven business model, it also keeps you accountable to running clean, good books,
Exactly.
right?
Exactly.
One thing that I know happens a lot in small business, and we saw it early on. Thankfully, you've not seen it as much, which is we just call them add backs, which is basically like you're trying to bury personal expenses in your business, and so people will do that to reduce their tax basis. So they'll put like their car payment in there, or like a lot of meals and entertainment for their family, but it's like air quoting like business dinner. The problem with that is in a small business, certainly like let's say that you have 3 alloys, right? So you have 3 different LLCs and you're normally going to have like a holdco LLC that sits above that.
Yes.
Right. And all your profits and losses will pass through into the holdco.
Yes.
Right? If you're going to run any financial gymnastics, do it at the holdco level.
Yes.
Because if you are interested in valuing your businesses at some point, they want clean books,
Correct.
right? And if you have lots of hidden expenses in there, it's going to artificially deflate your profit margins and make your business look less valuable.
Yes.
So you can still do some gymnastics. I'm not advocating but if you're going to do it at the overreaching level so you can keep your books clean so that you do know where you stand. And you can then, if you choose, say, rising tide raises all ships. We got 800 locations open. You've got 6. They're well run. You've got a regional in place. It's like, great. If your books are clean, it's going to be much easier to take that to market than if you have to unfurl all kinds of funky stuff you've got buried in there, right?
And that goes back to the month-to-month basis. Don't get lazy. That's where you stay organized and keep everything tidy. You're not going to have things like add backs. It's going to be a lot harder to hide them.
Yeah. And I mean, again, by default, if you're with Alloy, it's like we kind of force it because there's a chart of accounts but it's good for you, right? It's a good way to do it.
It's a great way to do it.
So I know it sounds like there's a lot of negatives, like don't do's, here's the mistakes or whatever, but like what are some positive things that you see that people can do that maybe they should be doing in a business that really will help them long term?
Truly long term from a financial health perspective, budgeting. Budgeting is huge.
And that's based on because you use forecasting and budgeting somewhat interchangeably, but in your term, budgeting would be expenses, right? And forecasting would be revenue.
Correct. So between those two things, if you want to see growth, if you want to increase your profit margin, the best thing to do is to dream it in. That's what I call it, is either you can take an increase in value over time in a percentage, or you can do it based on, let's say for Alloy HQ, we base our projections on assumed numbers. So there's 2 different things here. You can either assume that you're going to have 130 members flat for 6 weeks, 8 weeks, something like that, and it's going to give you X number of dollars. Or you can say, you know what, I think I'm going to increase my membership by 3% every week over a week. And there also, you'll see an increase. So depending on which method you choose, you can kind of see a way forward and a way to grow.
Right. That clarity can be very motivating. If you're, say, and we've had people, they the famous stories of like Trent, who was our number 1 guy. Now he's, trading out with another couple of number 1 guys.
Yes.
Shout out to Trent to get on it. But, like he's sitting at like a mid 100s and he's like, all right, I just pushed all the way to 150 and put him like well over 50K and like number 1 club in the system. It's like, well, but looking at those numbers, you can then say, okay, if our churn is good, so we're losing 3 people a month, and if I'm adding 10 people a month, that's a net 7. So I'm going to, again, budget for the expenses of the marketing to get there. And then I'm also going to forecast that if we can grow a net 7, we're going to be at 150 in 5 months or 6 months, whatever those numbers are.
Right? Exactly. It's just looking in the short term and the long term. Like if you've got long-term growth and you want to know when you're going to open your next location, budget and forecast.
Yeah. And I think when you look at financial strategies that people have, there's a million ways to go. And the great thing is we have a lot of savvy franchisees who they might get SBA loan for the first one or ROBS or whatever. But if the first one does well, maybe there's a different strategy for the second one. And then after the second one, you kick out a business loan against those businesses that are profitable. And so there's a lots of really advanced strategies later.
There are.
when you're doing multiple, especially 3+ locations. But if you don't have these basics right, it's going to be very difficult to even take this enterprise to a financial institution and ask for debt.
Yeah.
Right?
Precisely.
Because you don't have your numbers clean. So whether you're growing, whether you're in one location or whatever, it's super important.
Exactly. And trust me, having to visualize a way to perfect utopia profit-wise, it's how I sleep at night.
Yeah?
Yeah.
Me too, by the way. Then I have to come to you and be like, run this scenario 8 ways to Sunday.
You're
like,
show me how that works?
Yeah, exactly. Please put this into your master spreadsheet and figure it out.
Exactly. So numbers don't have to be scary. That's the takeaway. They can also be comforting. I use them to kind of calm my mind, so to speak. Yep.
You would.
Yeah,
you would.
I do.
Yeah, only you like do spreadsheets to calm yourself down before bed. I need to relax. I'm reading a book. You're like, I'm running numbers in my head.
I am.
You'd be like, if I could see your thought bubble, it would look like The Hangover, where he's coming down the escalator and he's getting ready to gamble, and he's like, all the numbers the formulas coming out of his head. That would be you for sure, right before bed.
Yes.
Well, I skipped right over to the start, but let's wrap up with it because I think it's so funny.
Okay.
So some of your okay, this is the opposite of what you're going to find in 99.999% of people that are in finance. Mm-hmm. Rachel is the most interesting finance person that I've ever met. And I hate to say that, but she doesn't wear a puffy vest and a dress shirt. She's not that guy.
So shout out to
shout out to Alloy. She's got an Alloy tattoo. She's got a whole bodysuit of tattoos. So we'll just start with that. And she was the person that found our tattoo artist for conference.
Yes.
What else do you do that's interesting?
Well, my degree and all of my college training is in commercial aviation. I have should have been an airline pilot, but I kind of got bored. That was the big thing is flying that much without touching the controls kind of turned me off. So yeah, I just paid way too much money to go to school and build flight time. That's my background.
Do you still have a pilot's license?
Yes. You never lose your license. You can go, got to stay current. So I am current, not as much as I'd like to be, but that's where I come from.
So you still could get in a plane. Can you fly different types of aircraft?
I do.
So you could jump in a Cessna or you could jump in a whatever.
Yes. Right? I fly single, which is a Cessna, and multi-engine, which is, little low
all prop planes? Could you do jets?
Not yet. No. I see. That's the thing is you got to get hired by somebody. It's too expensive to learn how to fly a jet. Without them paying for it.
Right. So it's almost like on-the-job learning.
Correct.
Yeah.
Correct.
Yeah, I get it.
Yeah. Well, it's okay.
All right. What are your other hobbies?
I play music.
That's the one I was looking for. Tell me more. Tell me more.
It's a family pastime. My husband is also in several active bands. My oldest daughter is extreme. I don't know what to even call her. But yeah, it's we're all musicians. We all have different bands and different genres. And I don't play anymore, but my husband still plays. And my daughter is booked on her first U.S. tour next year.
No, I didn't know that.
Yes.
Get closer to your mic so people.
Okay.
I'm afraid you're going to miss all this.
Yeah, no. She starts her tour. She's going to be touring the Northeast.
What type of music?
Mongolian throat singing.
Okay.
Yeah.
I
just blew your mind. I know.
What?
Yeah.
All right. We're look it up on your own because I'm going to.
It's called The Who. Go look up The Who. H-U.
Really?
Yes.
A lot like The Who, not
the WHO, but The Who, the H-U.
I'm so looking that up.
You should. You will not regret it.
Mongolian throat music.
Mm-hmm.
And what kind of bands have you been in?
I've been in bluegrass. I've been in punk rock bands. I've been in metal bands. I've been in bluegrass. I said bluegrass. Americana.
What instruments do you play?
Guitar, mandolin, keyboard. I tried being a drummer. My dad's a drummer, and I not a drummer.
No,
not a
your
drummer.
Thing?
I do not have that thing. No, my husband plays bass. He plays upright and electric. He's a bass wizard, and of course, Iris, my eldest, has 14 or 15 instruments from that region that I cannot pronounce. So I'm going to leave that.
Amazing. Yeah, I can't wait to see what kind of instruments Mongolians play. Like horns and stuff?
Yeah, exactly.
What, okay, so punk rock. Mm-hmm. Do you sing also?
I scream.
That's good for punk rock.
Yeah, exactly.
I think I could sing punk rock just based on the little bit that I've heard.
Just scream and tone. You're good. You're good. Yeah.
God, it's so crazy. All right, so that's our manager or director of finance. She is covered in tattoos. She can fly a plane, and she's in a punk rock band. Perfect fit. But I love it because you have such an interesting background, and you're also really good with numbers. It's like you just don't see it that often.
Yeah,
so.
you don't. But accounting was my backup plan.
Right.
So.
Plus, you're really cool. So it's awesome to have you on the team. Culturally, you're awesome. You fit that kind of like quirky, weird stuff that we are. Like humor with a touch crazy. That's us, right?
Oh, yeah.
And so we're really fortunate to have you, and appreciate you being on today. And later on, if we start to observe some different things, we'll get you back on here. But meanwhile, you guys just pay attention to your finances. I know it sounds really silly, and for those of you guys that are coming to us with a business background, this might have seemed really elementary, but you'd be surprised. So keep your books clean. Rachel can help you if you're within Alloy. We can grab your numbers automatically. It's all part of the plan. Follow your chart of accounts. Exactly. And that's about it. Anything else?
No, that's about covers it. Thank you for having me on.
Thanks for coming. We'll see you guys. Peace.